Okay, today we're going to go through Rivian's Q1 earnings, which just came out after the bell today. You may have seen my previous video where I was quite critical of Rivian, but this quarter actually had a lot of positives. Okay, so in Q4, Rivian did report their first gross profit, which was achieved in a little bit of what I called a strange way because they use regulatory credits to achieve that gross profit, but they actually achieved another gross profit in Q1, which is a great sign to see. They did that through a mix of software and regulatory credits. So Rivian's software business is through different things in the cars that they're offering through subscriptions, and a lot of it is the joint venture that they have with Volkswagen to integrate their ECU technology into Volkswagen electric vehicles. So this is a story that we should be closely monitoring because Rivian has now unlocked a new portion of their business where it's not just automotive sales. We have software, which could be licensed to other companies and really helps the overall picture of the company. So that's a new development. If you look further up in the shareholder letter, they said $157 million of this automotive revenue was actually regulatory credits. But what's different about this quarter that I don't see anybody talking about on X is that if you actually break out those regulatory credits, they actually still had a gross positive margin, which is really good to see. So if you just show you the math here, 922 in automotive revenue that we're getting from right here. And if we actually subtract the regulatory credits, we really truly had $765 million in automotive revenue. And if we now add in our software revenue of 318, we have this total revenue, which is pre-regulatory credits. And if we take our cost of goods sold down here, 830 for the automotive side of the business, and 204 for software. We can see we actually still had a gross profit of 49 million. Another reason why this is impressive is that in the automotive business, you have something called fixed cost absorption. So all of the fixed expenses in terms of the factory rent and stuff is spread over the units. So the more units that you produce, the more units that cost can be spread over. So right now, Rivian only produced 14,000 vehicles in the quarter. So the fixed cost absorption is higher, and the vehicles actually cost more to be produced. As R2 comes online and as they get into higher volumes, that cost can be spread over multiple units, and it will actually bring costs down. So the fact that deliveries are down and we're not producing a crazy amount, but costs are still getting better is a really great sign. Now I'll move on to a negative from this report. Rivian lowered their guidance. This is obviously a concern, seeing weakening demand. They're saying a lot of this is based on tariffs, a possible deterioration of the consumer in the second half of the year. I think that the market has started to focus less on this demand because the whole story is about R2. And you have to realize that this product that they have out in R1S, it's like $100,000 vehicle. If you want to get the vehicle in Canada, it's $130,000. So it's a price point where there's a lot lower volume. We're not going to sell as many luxury Range Rovers as we are Toyota RAV4s. I'll show you guys a clip from the earnings call right now where one of the analysts asked about the weakening demand.
Ask your question.
Yes, good afternoon. Thank you for taking my questions. With respect to reducing the full year outlook for deliveries, can you help us better understand, is that based on weaker incoming orders Rivian has already been seeing, or purely an expectation that the market is going to deteriorate going forward as you think about tariff costs and the effects on pricing as well as the broader economy?
Thanks, Mark. Yeah, there's a lot of uncertainty, and I characterize it as there's a challenging backdrop from a consumer demand point of view. And what we're seeing is, the interest in our flagship product R1 continues to be strong in that, this is the R1 is the best-selling premium electric truck or electric SUV across the whole United States, over $70,000. And it's the best-selling premium SUV electric or non-electric in the state of California. And so in terms of how our products are performing relative to alternatives in the market, we're doing extremely well. The challenge is consumers are more price sensitive than they typically are, or typically have been, I should say, and are looking for lower price alternatives. And this is what makes us so excited about R2.
So yeah, we really have to be mindful about the demand. Yes, sales are going down, but just to put into perspective, Tesla sold only 19,800 units of their Model X in 2024. The Model X would be the competitor for the R1S. The bulk of Tesla's sales are coming from the Model Y and the Model 3. Rivian does not have a vehicle that can compete in that price point yet, which is the reason why we're so bullish on R2, because finally, there'll be an alternative in that price range. So Rivian is actually already outselling Tesla in that price range. As far as the Model X, it's only selling 19,000 units. Rivian with the R1S is selling upwards of about 40,000. So when you start to think about, okay, we're penetrating the $100,000 market at such a high level with the R1S, if we can penetrate a similar percentage of the market at a lower price point to take away some of those sales from Tesla with the Model Y, then you start to talk about enormous volumes. And that's the reason why, everybody says, I see Rivians everywhere I go, I'm seeing more Rivians in my town, is because Rivian is getting more popular and people are buying more Rivians. It's just that the price point is so high that there's a limit to how many vehicles are going to be sold. If you look at similar vehicles in the 100K plus price range, it's not huge volumes. Real volumes are going to be when R2 releases. I don't buy too much into the whole story about Elon Musk and the brand damage and how Tesla owners are going to switch from Tesla to Rivian just because of this. I think that thesis will be realized once the R2 comes out. If the R2 was out right now, I think you would see a ton of people realizing that there's a valid alternative to the Model Y and opting to buy the R2. Unfortunately, the product launched technically a year late because this would have been the perfect time to capitalize on the brand image. Whether you agree or not with the politics, it's just a fact that certain subsection of EV buyers will be turned off just because of his political affiliation. So I actually think that if Elon Musk continues to inflict further damage on the Tesla brand, I think Tesla could actually be handing Rivian this exact market. And regardless of the politics and stuff, I think it's actually, for some people, just a nicer form factor. It's a much more boxy look. To me, it looks like a better vehicle. So I actually think that Tesla could be handing Rivian that subsect of the market, or at least handing them a bigger percentage of it. I'm just going to play another clip from the earnings where RJ talks about the need for having vehicles in this lower price point.
In the United States in particular, there's a pretty extreme lack of great choices. And when I say an extreme lack of great choices, in particular, price points that start below $50,000. And in order for us to see large-scale adoption of electrification, we need to have enough selection in terms of brand, the design or the look of the vehicle, the form factor, the segment. And if you think about it in terms of consumers coming out of ICE vehicles and finding their way into EVs, there's hundreds of choices you have in the ICE world for products under $50,000. And there's a very, very small number of compelling choices of EVs under $50,000. And there's an even smaller subset of different form factors. And so as a result of that lack of choice, we've seen, significant market share consolidation with Tesla. And they've got, great products with the Model 3, Model Y in that price category. But the market needs more choices, and this is why we're so excited about R2. We really believe this is something that will give consumers an alternative and a choice that's really interesting.
So that minute right there, I think that just lays out the bull case for Rivian so well. It's a testament to their brand that they've been able to do it at a higher price point. And if they can bring it in at a lower price point, not only will it give consumers more options for a cost-effective electric vehicle, but it will really drive demand for them. Basically, overall with this earnings, it's pretty straightforward. Rivian's making amazing progress on cost efficiencies. And the second thing is that they're making major progress on software, and that is an element of the business that is growing and shows that they're not just a car company similar to Tesla. I think the market's going to weigh that and the progress that we've seen there, that we've been waiting to see, that I don't think they've really exemplified until now, especially to see it 2 quarters in a row. They're going to weigh that with the fact that Rivian did guide for lower deliveries. Granted, they're shifting some of the blame onto the macroeconomic factors. But really, I think the former outweighs the latter, because a lot of the reason why Rivian has been in such a downtrend for all these years is there's a risk of bankruptcy because of the cash burn. But now that they've completely mitigated that with they're not losing money on a gross margin basis every quarter, and they secured funding from Volkswagen to clearly get them to R2, and further funding from the Department of Energy loan. I would say it's not like the risk now is zero, but it's been completely addressed, and I feel like it's a much smaller risk, one that doesn't really need to be worried about for the foreseeable future. So I do think that the market may be in the process of sort of rewriting the risk on Rivian and repricing it according to, damn, this company is actually going to make it to R2 versus will this company even survive until R2? So I think if you're reading the fundamentals, if you're reading the reports, you can clearly see that the risk has been heavily abated. And if we look at the price action in Rivian, Q4 report, I was very bearish after it. But if you look at the way Rivian's traded since then, it was a bad report. We've had the tariff situation. They lowered guidance. They just revised guidance down again. And Rivian has actually traded pretty stable. The price has actually held up on a year-to-date basis. I mean, the stock is basically flat, where you have other high-risk, high-beta names that were down 35%. So one risk that I am watching is that in the second half of the year, they do need to shut down the factory to retool, to, get the line on for R2, get all the equipment set up. So I do expect that quarter, I'm guessing it's going to be Q3. There may be some funky accounting. It might be a little messy. Rivian did mention that gross profit may fluctuate quarter to quarter, but over the whole of 2025, they expect positive gross margins. So that's a risk that I'm kind of watching, and the reason why I'm not really putting on my full position at this time. But I'm definitely monitoring the situation closely. I've reopened an equity position, and I'm trying to find the right time frame for some leaps that I can dollar cost average into, because I think R2 is going to be a hit. I just think it's the perfect product to compete with Model Y, and I think a lot of people will gravitate to it the same way you've seen people gravitate towards the flagship product. I think it's a testament to their brand. People like the product. It's cool. It's a symbol of status, and I really think they're going to break through with R2, and this is a story that I want to participate in and, be involved with. I'm just in the process of trying to think what is the best vehicle to do that. Want to have an equity position, want to have leaps, and I also want to be in it for the long term, but I do want to time it right, and I think we're getting closer and closer. That's a quick overview of Rivian Q1 earnings. If you like this, please drop a like, subscribe. I will be reviewing and going over all of their future earnings. So if you like Rivian and similar stocks, please subscribe.